So the main intent of trying to reach a trade agreement with many countries across the world is that President Trump trying to give some kind of a certainty uh, to the policies of the Trump administration and also to the companies which are dealing with the United States, whether they are actually manufacturing within the US, selling, importing. So all the constituents which are interested would definitely like to keep this into account. Um, Tariffs which are just left alone and subject to negotiation could lead to a lot of difference in anticipation, and therefore a finality to this tariff imbroglio needs to be worked out at the earliest, because if the uncertainty comes from the hegemon, then the world economy as a whole will not function well either. In its latest global economic prospects, the World Bank has analyzed just this aspect. Its conclusions are inevitably provisional, but the direction of travel must be correct. It starts from the assumption that the tariffs in place in late May will remain over its forecast horizon. This might be too optimistic or too pessimistic. Nobody, perhaps not even the president, knows what exactly could happen eventually. In this context, the World Bank judges that global growth is projected to slow markedly to 2.3% in 2025, zero point 0.4 percentage points below the January 2025 forecast, the slowest pace since 2008, aside from 2 years of outright global recession in 2009 and 2020. Over 2026 to 2027, a pickup in domestic demand is expected to lift global growth to a still subdued 2.5%, far below the pre-pandemic decadal average of 3.1%. All this is bad enough, but risks seem overwhelmingly to the downside. Although in the short run, I think patch-up solutions and trade agreements could be worked out, including the one between the United States and China. Thus, the uncertainty created by Trump's trade war could lead to far greater declines in trade and investment than projected. That's according to the World Bank. That's not my analysis, but I'm just quoting you and then I'll give you my take. Centrally and certainly, it'll be very hard to trust in any supposed deals now announced. Lower growth will increase the social, political, and fiscal fragility, so raising perceptions of risks in the market, and therefore the markets could go into a downturn. This might create a doom loop with higher costs of finance, increasing risk and lowering growth. Weak borrowers, private and public, might be driven into default. Shocks from natural disasters or conflict could then be even more economically damaging. Upsides can be imagined. Now the trade deals might be reached in which many might courageously trust. AI dust might cause a surge in global productivity and investment. Also, everything might just calm down. A difficulty for this is that today's Trump shock comes after almost 2 decades of shocks: global and Eurozone financial crisis, the COVID pandemic, post-pandemic inflation due to supply shortages, and the Ukraine-Russia war. Animal spirits have been quite impaired, therefore. Alas, the poorest countries will suffer the most. By 2027, the per capita GDP of high-income economies will roughly be where it had been expected to be before the COVID-19 pandemic. But the developing economies would be worse off, with the per capita GDP levels 6% lower. With the exception of China, it might take 2 decades for these countries to recoup their losses of the 2020s. I would add India in this occasion. I think it will do much better than the rest of the world. This is not just a result of recent shocks. Growth in developing economies has been ratcheting downward for 3 decades in a row, from an average of 5.9% in the 2000s to 5.1% in the 2010s to 3.7% in the 2020s. This tracks the declining growth of world trade from an average of 5.1% in the 2000s to 4.6% in the 2010s to 2.6% in 2020s. Meanwhile, debt is piling up. In the long run, it will not help whichever way the end of the tariff war takes place. So what is to be done? First, liberalize the trade. While developing economies have liberalized substantially in recent years, most of them still have far higher tariffs than high-income economies. Targeted infant industry promotion can work. But if a country has little international leverage, then the best policy remains one of free trade, coupled with the best possible policies for attracting investments, improving human capital, and preserving economic stability. In a bad environment as now, this is even more important than in a benign one. The choices for bigger powers, the China, EU, Japan, India, the United Kingdom, and others are more complex. First, they too need to improve their own policies to the greatest possible extent. They also need to cooperate in trying to sustain global rules among themselves, not least on trade. Some powers need to recognize that global imbalances are indeed a significant issue, though they are not about trade policy but rather global macroeconomic imbalances. This is far from all. As the United States retreats from its historical role, others are having greatness thrust upon them. The continued progress on addressing the challenges of climate change and economic development depends on these powers. A better way to resolve excessive debts is necessary, for example, that requires going against today's trend towards even greater suspicion of another. It is possible, even likely, that we are witnessing the withering away of a great effort to promote a more prosperous and cooperative world. Some people will say that such an ending would just signal healthy realism, but it would be a folly. We share one planet, and so our destinies are intertwined. Modern technology has made this inevitable. We are at a turning point. We must choose or make our choices wisest given the circumstances. To get to know more where the world economies and the stock markets are heading, do join our Prime Plus Telegram group. And you can do that by WhatsApping us on 732-732-2720. And yes, friends, it's going to be exciting. I think the next few days should see some good news. This is from the very short-term point of view. But as I have just explained in my presentation, I think over the medium term, there look to be challenges for the world economy and world stock markets alike. Happy investing and have a great investing time ahead. Take care. Bye-bye.